Overnight, the Australian employment data came in stronger than expected. The number of employment change rose by 42.2 thousand. That was higher than the 20,000 expected and higher than the 12.8 thousand last month. The unemployment rate fell to 4.3% from 4.4% expected and 4.5% last month. So good news, sent the Aussie versus US dollar higher, but since then we've seen a rotation to the downside as risk-off sentiment seems to have taken hold. I'll talk about the technicals driving this currency pair in this video, so let's get started. Now that you got the fundamental picture intact, the technical picture saw the price move sharply higher after the employment report. We moved into a resistance area up here, defined by these different swing highs and lows, I guess, going back in time, but I had a horizontal line coming in over here, and indeed that's where the price stalled. We rotated back to the downside, broke to the upside, and then extended above the 50% midpoint. That 50% midpoint is of this move down from the high price going back to September to the low price that we saw in October. 50% comes in at 0.6573. We did move above it back here, but could not sustain the momentum when we fell back below it. Right here, we saw the increased momentum to the downside, never to return back to it again until today, where the price moved above that level, but could not sustain the momentum and started its move back to the downside. Since then, we've seen the price rotate all the way down, with the U.S. stocks opening lower, risk-off sentiment kind of prevailing, and we moved back from whence we came earlier this morning, or earlier today in the Asian Pacific session before the employment data, and that took the price back down to the key 100-day moving average. We held the 100-day moving average for the most part right through here, and here. Did break above it yesterday, but held the topside swing area and traded above and below. It was kind of messy before we got the employment report to push the upside. Nevertheless, the 100-day moving average is always a key level for traders from both a buying and selling perspective. It's a key borderline level, and as you can see, we did hold that support. Currently trading at 0.6550. So going forward, what we know now is that as long as we can stay above the 100-day moving average, the buyers are still in play. If we were to move below that level, I would expect that we'd see further momentum with the 100-hour moving average as the next key target at 0.6529. Get below that level, and we start to look toward the 200-hour moving average. Alternatively, with the price now holding the 100-day moving average, the buyers are, like I said, still in play with the other target levels, including the high price that we saw earlier, or not earlier, a few weeks ago. That level comes in right around that level right there at 0.6561. And then we have the other high price at 0.6564 going back to these areas right through here. So that area between around the 60 level and the 64 level is going to be the next key target to get through and through before they get to the 50% retracement at 0.6573. So that's my technical look at the Aussie versus US dollar, and up and down and maybe up again. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.